I'm Clifford Bennett, Herston Economics, and we're here to help you get it right. We're certainly getting it right this week. We've been saying all week, get ready for an accelerating equity market to the upside and get ready for a fall in the US dollar and look for oil and sterling in particular to have strong rallies. That's what we're seeing. Gold continues to build. Gold is going to rally. It might have one more small dip, but I think only in that range that it's been in the last few days. Nothing too dramatic. The dominant risk for gold is still very much the upside. Those gold stocks are still ridiculously undervalued. What we saw last night is a pattern we're going to continue to see. Increased realization that the problem in Europe isn't anywhere near as big as markets thought they were, or that some of the people in the markets wanted you to think they were. The second thing is that yes, the US economy is going to continue to recover. Beige book overnight, firm to moderate growth in virtually all regions, and looking better and optimistic. But what was really interesting about last night, and which I've been telling people would be happening, is you're going to see good economics information come out of the United States whilst the US dollar continues to fall. All those people have got long the US dollar because the US economy is going to recover. Big mistake. Now going to have to bail out. US dollar is going to fall a lot further this year, maybe 15–20%. We think the euro could go 156, maybe 165 this year. Certainly in the short term, the euro is going to go 133, 134 quite quickly, but numbers like 139 are reasonable expectations in the not too distant future. Australian dollar recovered now. We said the flood impact for a couple of days. Once it's out of the way, the Australian dollar is still going 103. We're going to hit that 103 sooner rather than later. Even as a short-term target, I think 101.50 is probably highly probable, and then we'll have some work. It's not going to be a one-way street, but the Aussie is definitely going higher on the back of a weakening US dollar. You've got to remember the Australian dollar is probably going to be the strongest currency in the world this year, particularly against the majors. The US dollar is going to be the weakest currency in the world. So that Aussie-US cross can really catapult to the upside. Don't get caught short. Similar story for equity markets. We've been saying all week we're going to get a strong rally this week. We've been saying in our reports the last couple of days, by the way, if you'd like one of our reports, just email me. But we've been saying in our reports the last couple of days that this is probably the lows for the year in equity markets. This was it. We've probably just seen the low for the year. And even if we're wrong in that view, it's a great risk-reward scenario here because we know the lows we've seen this week. If they break, then that story's wrong, obviously. But I think those lows will hold. What we're looking for this year in the Australian equity market, and we've been looking for it for some time, is a 20% rally. So we think the market can hit 5,000 really quickly in the short term. 5,600 is our target at the end of the year. You've got to realize how bullish these markets are. It's up, up and away, and don't get left behind. Happy trading.